Nigeria's inflation rate, although still in the double-digit territory, but the consumer price index is now significantly growing at a slower pace since March this year. The National Bureau of Statistics shows that the consumer price index for the month of August fell to 17.01%, representing a 0.387% lower than the 17.38% recorded the previous month. But despite the gradual decline in inflation rates in the last 4 months, checks across major markets still shows that prices of goods and foodstuff are still on the rise. Food Index, a closely watched index which measures the rate of change in prices of food items in the country, dropped to 20.3% in August 2021, compared to 21.03% recorded in the previous month. According to the report, the rise in the food index was caused by increases recorded in the prices of bread, cereals, milk, cheese, egg, oil and fats, as well as teas and cocoa. Now, what are the indices, or what are these indices driving, or let's identify some of them, driving inflation figures downwards? Yes, it's declining, but when you look in quarter and quarter and all of that, you see that there is still this upward trend one way or the other. Joining me to do this is a partner at Deloitte & Touch, Mr. Taiwo Okunade. Good afternoon, Mr. Okunade. Thank you very much for your time.
Good afternoon, Tolu. Thanks for having me again.
Yes, it's 5 months, 1, 2, 3, 4, 5 decline in inflation. And many say that it's like the economy is back to full recovery. But in some quarters, the argument remains that this is not commensurate to what we see or what we buy in the market. Now, take us through what this means. 5 months decline. What's really the impact on this on our day-to-day livelihoods?
Okay, thank you very much. That's a very good question. Sometimes when we hear about, decrease in inflation, what people, want to hear is that the prices of goods and services are decreasing, at the same time. But that is not what this means. Year on year, the inflation number has decreased. But that doesn't mean inflation is going away. That is not what it means. If you look at like you rightly pointed out, in March this year, the rate of inflation was around 18.17%. At the moment, it's about 17.01%. What it means is that as of March, the prices of goods and services are increasing at the rate of 18.17%. At the moment, they are increasing at the rate of 17.01%, which means that even though inflation is increasing, it's increasing at a decreasing rate, but inflation is still there. Now, a lot of people will be asking the question about, the goods, the normal, food items that you buy in the market. Why are the prices not going down? What this means, if you examine the numbers, critically, what this means is that the food inflation is increasing at the rate of 20%. Items that you buy, staple food that ordinary people buy in the market, the prices are still increasing, not even at a decreasing rate, but at an increasing rate. So you will still continue to see increase in some of the prices of some of the goods that a lot of people survive on. But there are certain items, for instance, non-food items, which is basically the core inflation that you see. Some of those items have their prices decreasing over the last 3-4 months. That is good news if you look at it. But one thing I'm going to ask people to do is to be let's say have a bit of optimism, but that optimism should be with caution, because we are still not out of the woods. Another thing you need to look at is that even though we are saying that the year-on-year inflation, increased at a decreasing rate, last year during the COVID-19, period when the economy was completely shut down, there were high demand for a lot of items with shortage of supply. As at that time, there was significant increase in the prices of items that everyday people buy, food items, non-food items that people needed as at that time to survive due to the shutdown of the economy. The inflation rate increased astronomically as a result of that. Now, if you are comparing the inflation rate as at today, as at August 2021, with the inflation rate as at August 2020, you are not going to be able to have an accurate view, of what is exactly happening. So what you need to do is to be able to factor in the impact of COVID-19, that is the base year effect, in determining whether we are on the right track in terms of reduction in inflation or we are not.
What a good way to start this discussion. I like that background that we put to it. But I like to say that when we look at agri space, talking food a little bit now, we still see that we are grappling with some issues. We know about the anti-grazing law that governors are signing into law. We know of the headers and all of that. And we are close to harvest season. Even the central bank is projecting that price of foodstuff might drop or might reduce. Do you think that would happen? Because if that happens, it would impact on these figures, obviously.
Absolutely. But I think that there is a bit of optimism in that statement. Even though, I'll be happy if something like that happens, and everybody is hoping that, the number, the inflation rate will reduce significantly, especially food inflation and, inflation on agricultural produce will reduce significantly in the next few months. I still see a bit of challenge around, security. I still see a bit of challenge around exchange rates, foreign exchange rates. If you are unable to address the issues of security, especially in the northeast, and now coming to the south region of the country, we are not likely going to see a turnaround in the inflation rate anytime soon. When I started, I mentioned the issue of exchange rates. This has a significant impact on what we are likely going to see in terms of the prices of goods and services in the next few months. As you are aware, as of today, the exchange rate in the parallel market is about 562 naira to a dollar. As at 3, 4, 5 months ago, let's say specifically maybe in February 2021, the rate was around 460 naira to a dollar. Just imagine what has happened to our money, our naira, between February, March, and August of this year. The naira, by implication, has devalued significantly. What this means is that the amount that a common man used to buy an item or good and services as of March 2021 has reduced significantly in terms of purchasing power as of today. So if you used to, possibly maybe you were used to buying an item at 1,000 naira in March of this year, because of the impact of exchange, the purchasing power of that 1,000 naira has reduced to possibly around 700 to 800 naira today. So that's a significant reduction in the purchasing power of people. So if you are unable to afford the same thing that you could afford possibly 5 months ago, now, then that will add to possibly the mystery index that everybody is having. When I say mystery index, it will add to the unhappiness of a common man in Nigeria. So, and that is what we see until the issue with exchange rates is rectified as soon as possible. We are not likely going to see a reduction in inflation because the exchange rate increase, inflation is likely going to go in the same direction.
When we talk about expectations like this one that you just talked about, let me also throw this to you. Let's assume we have the PIA now, it's a law, and subsidies removed. We can see what's been playing out, 170 something billion naira every month. Clearly it's unsustainable. And one way or the other, there's a review of the electricity tariff. What do you think will happen to inflation figures? Meanwhile, the CBN on one side is tracing single digits, thinking of 9% anytime soon. That to me looks like a very tall order. Not even going to happen this year at all.
I agree with you. As you are aware, I'm a supporter of the Petroleum Industry Act. I think it's one of the best things that the government has done in the recent time. You know, and I'm also a supporter of the regulation. I think the economy should be deregulated. You know, the oil and gas sector should be deregulated, and the electricity sector should also be deregulated. We need to have cost-effective tariff in that sector, so that people will know exactly what we are paying for whatever service that we are consuming, whatever good that we're buying. So I think the removal of subsidy will go a long way in helping the economy. You know, it will also help us in removing the issue of accountability that we have not been able to see in recent time. Because you know, you continue to have subsidy, people do not necessarily see the impact of the subsidy in, you know, in whatever, and you know, the government continue to incur significant amount of money on subsidy without, you know, significant benefit to the economy. So I think that is something that government will need to, you know, to look into eventually. Uh, you know, so I think the impact of, you know, removal of the subsidy, we have an impact in negative impact on the economy in the short term. I think the short term negative impact. But I think in the long term, we're likely going to see significant change in the way we do things in the country. I think when the private sectors are allowed to operate, you know, with limited regulation. When I say limited regulation, not that I'm advocating that the, you know, private sector should do whatever they like, but I think if a private sector that is putting its money into a business is able to determine how the business should be run without any hindrance from the government, that is likely going to have, you know, positive impact on people bringing their money into the country. Is likely going to attract foreign direct investment into the country. So I think this will have significant benefits on the country in the long run. But in the short term, we should be, you know, we should be ready to make the sacrifice of either increase in prices of items that we're buying, and increase in items that were, you know, day-to-day items that were used to, for instance, fuel, diesel, and other food items, including electricity tariff.
Including the electricity. Even NEC, I think there was a review sometime recently. But let's move away from that. When we look at economic recovery, which is something that is very important at this time, when we're looking at inflation, forex, and all of these challenges that we grapple with, what would you say, or what's your assessment? We've always talked about this, but it's important to talk about this when we're looking at inflation figures. What's your assessment of the support or the synergy between the fiscal and the monetary side? We keep seeing a lot coming from the monetary side, particularly from the Central Bank of Nigeria, supporting MSMEs, looking at the real sector, looking at the creative sector, looking at the pharmaceutical space. We can go on and on. The Central Bank has even left the core duty of just stabilizing the currency and have moved away to other functions. Now, would you say that the fiscal side is complementing all of these efforts? Because that is when we can have inclusive growth, and that can impact on all of our figures coming from the NBS.
Unfortunately, the answer to your question is no. I think the central bank is doing a lot in terms of the monetary policy. I've seen few policies that I think are pro-business, even though sometimes CBN can be reactive when it comes to introducing some of these policy. And CBN will also need to start considering, maybe relaxing some of the controls around foreign exchange, the forex. The controls that are being put in place by CBN at the moment are making it difficult for people to access foreign exchange for the purpose of doing their business. If you notice, as I think about 2 or 3 months ago, CBN said that about 70% of requests for foreign exchange were deemed to be invalid. So what this means is that these people that wanted to access foreign exchange, forex, as at that time, we have to look for alternative routes, avenue of sourcing their forex. So if people are looking for alternative. The other alternative that is available is the parallel market. And if you are going to the parallel market, what this means is that the demand for forex will increase, but the supply for forex in the parallel market may not be enough to meet that demand. This will automatically drive up exchange rates, which is why we are seeing at the moment continual increase in the exchange rate, naira to dollar on a daily basis, compared to what it was in the last in the last 5 months. So CBN will also need to, come up with, a relaxing policy that will not make it difficult for people to do their business. They have to be pro-business rather than anti-business. And in terms of the fiscal policy, I don't think we are seeing enough from government. CBN is doing its own, and sometimes you think that what CBN is doing is contradictory to what government is doing in terms of fiscal policy. Government will now need to start, developing a coordinated effort in its approach to introducing policies, tools that will help us in increasing revenue. Because at the moment, what government is trying to do is to increase revenue within the economy. For instance, you look at taxation, you look at different kind of avenue for shaping the fiscal policy of the country. Now, government is trying to increase revenue without necessarily developing or putting in place infrastructure that will help business to grow. Without business in the economy growing, it is going to be difficult for revenue or tax revenue or revenue from other sources to increase. So government will need to look deeply into its fiscal policy and do it in a coordinated manner in order to be able to help business to grow and at the same time increase revenue that is accruable to the government from the economy.
Now, almost let's on a final note. IMF is saying that we could do 15.5%. That's talking about inflation rate towards the end of H2, or that's half year 2021. That's towards the end of this year. I don't know if you come up with projections for the end of the year, and what are your fundamentals? What are you considering?
Yeah, I think we are likely going to see, continue to see an increase in inflation at a decreasing rate, like you mentioned, and I agree with that projection. We are likely going to see something in the region of about 15% to 15.5%. So that's basically what I think we are likely going to see. And the reason why I'm saying this is because last year, the base year effect of COVID-19 pandemic and the shutdown of the economy started easing around the last quarter of 2020. So the economy started opening up. So even though the economy was not was not fully operational as at that time, I think we are likely going to see that effect reflecting again in what we are going to see in the last quarter of 2021. So basically, it's going to be the effect of base year that will dictate how the inflation rate will be in the next quarter of 2021.
It's a good way to leave it there. I've been speaking to Mr. Taiwo Okunade, who's the partner, Deloitte & Touche. Thank you very much for making more sense of the figures just released by the MBS with focus on inflation. Thank you so much for your time. We appreciate this.
Thanks for having me, Tolu.